Considering a personal loan? If you need to borrow a decent amount of money pretty quickly and you're not looking to pay those super high credit card interest rates, a personal loan could be a good option. I'm a writer on the lending team at NerdWallet, and I've used personal loans a couple times to pay for some major home expenses. It was a lot faster than waiting for a home equity loan to get funded. There are lots of lenders that offer personal loans. Banks and credit unions offer them, and there are also a lot of online-only specialty lenders out there. But how do you know which lender is right for you or which loan is right for you? Well, today we're going to talk about how to get a personal loan. Before we get too far, let's make sure we're on the same page about what a personal loan is. So a personal loan is an unsecured loan. That means you aren't putting up any kind of collateral like property in order to get the loan. You get the funds from it as a lump sum. So as soon as the loan closes, that money is going to you. But you pay it back over time. There's a fixed interest rate, so your payments are the same each month. And you can use a personal loan for anything, although it's generally recommended to use these for a one-time significant expense, ideally where paying off the loan will leave you in a better financial position than you were when you started. So let's get into it. Step 1, check your credit. You can get your free credit score on NerdWallet, but if you want to dig into the specifics, head to annualcreditreport.com and request free copies of your credit reports from the 3 major credit bureaus. If there are any inaccuracies or errors in there that could be dragging your credit score down, you can dispute them and get them fixed. The stronger your credit score is, the better your chances of qualifying for a personal loan. A higher credit score could also help you score a lower interest rate. Next, figure out whether you can afford the loan. This doesn't need to be a ton of math. You can head to nerdwallet.com and use our personal loan calculator to see how the numbers might work for you. You're going to need to know a few things to get started, but they're pretty basic. One is the amount of loan that you're looking for, so how much money you want to borrow. Next, just estimate what you think the interest rate is that you might be able to get. And then last, how long you plan to spend repaying the loan. Personal loan terms usually last from 2 years to 7 years. You might also want to add in an origination fee. This is what the lender charges you for giving you the loan. There are some no-fee personal loans out there, but it's likely that you'll be charged between 1% and 10% of the amount you're borrowing in order to get the loan. Depending on how the lender structures it, that might be paid upfront at closing, or it might be taken out of the loan amount. Enter all of that in, and our calculator will show you your estimated monthly payments, as well as your total costs for the loan. So all in, principal and interest, how much you're going to pay over the life of that personal loan. If that works for your budget, it's time to start researching and comparing lenders. Pro tip, head to nerdwallet.com, where we've reviewed more than 35 different personal loan lenders. Now, what are you going to look for in a lender? Well, you want to make sure it's a lender that works for you. So say you're looking for a personal loan for debt consolidation, you might want to look for a lender that has some kind of specialization in that area. You also want to make sure that you're the right kind of borrower for them. So their minimum credit score, any other qualifications that they list up front, make sure that you can meet them. And you also want to know that the loan amount you're looking for, the length of time you're looking to repay it, and if you need any special extras, like say you need a cosigner on the loan, you want to make sure that the lender allows it. Now that we've found some potential lenders, let's apply for pre-qualification. Pre-qualification gives you sort of a preview of the loan that you might be getting. You'll be able to see the different terms that the lender is offering, including, importantly, an estimate of the interest rate that you might be able to get. You will need to provide some personal information in order to get pre-qualified, but the lender is only going to do a soft credit check, so that should not affect your credit score. And then once you've been pre-qualified by a couple of different lenders, you can compare the documents that they give you to see which loan is going to work best for you. It's usually the one with the lowest interest rate. Now you know what you want? Let's apply for that personal loan. Applications are going to vary by lender, but they'll generally want these 3 things. 1, some kind of identification, so that could be a driver's license or passport. 2, proof of address, something like a utility bill. And 3, proof of income, so think tax stubs or income tax returns. When you do the application, the lender will do a hard credit check, and that will ding your credit score. But if you pay off your personal loan in a timely manner, that could help you build your credit back. Loan approved? Awesome. But read over that contract just to make sure there aren't any surprises, like any hidden fees or anything like that. If it's good, sign on the dotted line or e-sign and go ahead and get that money. But don't forget, your first payment is probably in 30 days. I'm Kate Wood, and I'm a writer on the lending team at NerdWallet. If you're feeling ready to get a personal loan, head to nerdwallet.com and check out our list of the top lenders for personal loans. But while you're here, like and subscribe for more.